Good morning. This is Chris Robinson, Robinson Ag Market with today's morning grain and livestock comments. Didn't do the pre-opening. Kind of wanted to see if we had any sort of action. Overnight was pretty quiet. I'm looking at the soybeans right now. We're basically trading right at the 20-day moving average, 1023 and a half. December corn trading right at 422. Again, there's not a whole lot going on. We are waiting to see today if we get I guess they're calling it Trump bucks now. What sort of aid package will be coming to farmers and producers? Um, it's interesting. These corn sitting right at its 20 right at its 20-day moving average too as well, basically 422 and a half. It feels like the computers are in charge until we get more information. The October 9th crop report is canceled. Obviously, we're not going to get that. Um, Other things we're looking for here, again, probably the biggest thing is today is what's going to happen with um, any sort of supplementation coming from the government fund wise. I would continue to watch the headlines. The moment they make that announcement, I think we could probably get some sort of a pop, especially if there's any indication that there might be something positive going on with China. Um, when you look at what's going on out there, guys are out there harvesting. I'm sure you're listening to this harvesting, so don't want to waste your time. I wish I had better news. There is another case of screwworm down in Mexico. That's probably going to influence um, cattle prices here a little bit today. I will say this: if you're trading cattle, if you've been reading my letter, we've had this 360, 270, 363 level in November feeders as a big level. Why? It's the top of a wedge. Wedges matter because they become self-fulfilling prophecies. Everybody looks at them. We went right to it this morning, and then obviously some people sold it. As I'm speaking to you now, we're trading 361 half, up 70 cents. December fat cattle is trading 237, up 50 cents. We're still hanging in there, but again, it's very, very technical. I would watch those levels. Um, if I'm a hedger producer, I don't want to be playing the game of calling tops. I want to make sure that we are uh, capturing as much of the revenue gain that we've had here in the past 10 months. At some point, this thing's going to fall out of bed. I don't know when it is. Nobody knows when it's going to come. But go back and look at 2015, 2016, when we corrected off those all-time highs. When it happens very quickly. I don't know what's going to spark it. December lean hogs down a buck as I'm speaking to you. Again, very, very technical. We made those contract highs right after a really good and friendly pig report back a couple Thursdays ago on the 25th. I would say this, I don't know if 86 is going to hold or not. If it doesn't, I don't want to be in a situation where I'm watching this trade 78 or 74 going up. We didn't do anything here. Now, by the same token, this may be a very key level here to re-own any animals that you sold. So whatever your risk is, I would get it on paper. This 86 is going to be our fighting zone here for a while, and these hogs, it's a good problem to have. It's a lot better than being down at 67, which is where we were in April on the first tariff scare. As I'm speaking to you now, Kansas City wheat's down a penny, trading 494 and a quarter. Again, there's still a lot of downside risk in wheat, in my opinion. What's a lot? Probably 50 cents to a dollar if we don't hold these contract lows. Every time you turn around, there's the wheat crop in the world is getting a little bit larger, and there's more and more people that are looking to export wheat. So wheat producers, I don't mind if you're going to store it, but don't store it and ignore it. Make sure you keep a cheap put underneath that. It's time to start looking at July of 2026. July, Chicago's trading at 550. I get it. I wish it was at 750 as well. But what you don't want to do is let 550 turn into 450. It wasn't that long ago in June. This July 26 contract was trading at 650. So we've already lost a dollar. I would stop the bleeding with a kind of a worst case scenario put and hold on tight and look and see if we get some sort of a rally in the next 3 to 6 months where we can reward it with better sales. So that's about it for this morning. I would watch this level in November feeders right around 62.70, 363 level. There's a big trend line there. I'm not saying the top is in, but I'm saying it's a good opportunity for everybody to sort of reassess what you're at. You may be bullish. You may be, part of the camp that thinks we're going to rally for the next 2 years, and you don't care about downside risk. That's great. I don't really care what your opinion is. My whole program is about defending revenue until you sell your animals. I don't want to put in a situation where I'm capping profits by selling futures too early. This is a market to use long put options because you get a floor, but you leave the upside open. If you're looking for help, you may call 312-638-8868. This is Chris Robinson. We'll see what the government is going to do today.